OP Financial Group had an excellent result on the first quarter of 2023, despite the uncertain business environment. Our operating profit was 480 million euros, up by approximately 300 million euros from a year ago. Total income increased by 36% and total expenses by 8% over the previous year. The loan portfolio and deposits remained at almost the same level as a year ago. The loan portfolio grew by 1% year-on-year, totaling at 99 billion euros. Deposits decreased by 1%. Earnings were good in all three business segments. Especially earnings by retail banking and corporate banking were strong and improved clearly from a year ago. The impairment loss on receivables decreased by over 70% year-on-year. OP Financial Group's CET1 ratio was very strong at 80.3%, which exceeds the minimum regulatory requirement by 6 percentage points. When we look at the year-on-year change of our P&L items, we see that in the first quarter, our net interest income grew by 84%. A significant rise in market interest rates increased net interest income. Net commissions and fees remained at almost at the same level as a year ago. OP Financial Group has applied IFRS 17 insurance contracts as of 1st of January 2023. The figures in the income statement and balance sheet for 2022 have been adjusted accordingly. Insurance service result decreased to minus 2 million euros in Q1. The investment environment was challenging due to the uncertainty of the global capital markets. However, OP Financial Group's investment income rose to 128 million euros in the first quarter. Moving on the expenses side, the total expenses grew by 8%. Personnel costs increased by 5% and other operating expenses by 16%. Depreciation and impairment losses decreased by 19% year-on-year. A year ago, the indirect effects of Russia's aggressive war in Ukraine increased impairment losses on receivables. Impairment loss on receivables in Q1 '23 were at low levels and decreased by over 70% year-on-year. The ratio of impairment loss on receivables to loan and guarantee portfolio was at 9 basis points. OP is one of the most financially solid banks in Europe. OP Financial Group's CET1 ratio was very strong at 18.3%, which exceeds the minimum regulatory requirement by 6 percentage points. In the first quarter, OP Financial Group adopted standardized approach in the capital adequacy measurement instead of internal ratings-based approach that was applied earlier. OP's funding and liquidity position is stable and very strong. Our liquidity coverage ratio was 217% at the end of reporting period, and the net stable funding ratio was 127%. These ratios are on a very good level. The EU Single Resolution Board has updated the MREL for OP Financial Group. As part of the MREL, the resolution authority has reduced OP's subordination requirement. The buffer for the MREL was 8.2 billion euros, and for the subordination requirement buffer was 5.6 billion euros. To summarize, OP Financial Group has strong capital adequacy, liquidity and profitability. Our operations are performing strongly with earnings at the excellent 480 million euros in Q1 '23, and our outlook is that OP Financial Group's operating profit for 2023 is expected to be higher than in 2022.